Well, I do think that the market has adopted a false narrative. And the narrative is the following. Higher rates means lower stock prices. Historically, that's not true at all. In fact, stock prices have been better when the 10-year's been between 5 and 7 than they have when it's been between 3 and 5. So higher inflation means a little bit more revenue for companies. That's not necessarily a bad thing, and earnings is ultimately what matters.
And I'll tell you, I mean, a lot of folks obviously look to once they start cutting that the market actually pulls back a little bit, to your point. Let's talk about advice to investors. Some of your thoughts. What do you tell somebody who has a longer term outlook? Where should they put some money to work?
If you believe in the AI story, which I do, and you believe that it will drive a technology breakthrough super cycle that benefit companies and earnings therefore, then investors need to be in. And so you can trade around the margins if you're entertained by it, but I think this is a cycle you just want to be in. And you can be in large stocks, you can be in mid-cap stocks, you can be in small cap stocks, which haven't kicked in yet, but I'm excited for when they do. So just own this market is the advice I offer.
Yeah, it was interesting because when we were speaking, I mean, I always think about that phrase, back up the truck, load it up. I mean, so you really feel that it's a good time to get in. Would you be doing a lot of dollar cost averaging over this year? We are seeing some volatility.
That's what we do. If you gave me, money to invest right now, we'd dollar cost average it in probably through the course of the summer. The first quarter was up 10.5%. If we annualize that, we'd be up 44% of the year. Guess what? We're not going to do that, right? So this 5% pullback we're in is healthy. In an average, election year, you get a 15% pullback and then a 26% rally. So if we're in a, search for the 200-day moving average, which we may be, who knows, I think you buy into that.
Intel's Q1 earnings report is just around the corner on April 25th, and while many tech investors wouldn't think too much of this event, especially with the majority of the Magnificent Seven also reporting earnings soon, there's a lot to unpack for those of us who follow the chip giant closely. In fact, some investors and analysts are saying that Intel's earnings could shake up the semiconductor market, and that's what we're going to talk about in this video. We'll also talk about whether investors should hurry up and buy Intel stock before earnings. But before we do that, if you want to keep up with Intel's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Welcome back to the show. David Waddell's with us, CEO and Chief Investment Strategist at Waddell & Associates. Nice to see you.
Great to see you.
I'm glad you're here because I know you're feeling pretty positive based on our conversation. And AI, the arms race, the AI craze, it's not over, is it?
No, it's just begun.
Tell me more.
Well, it's 1994, right? So if you go back and look at the deployment of the internet, between 94 and 2006, earnings grew at over 10% a year. Even with 2001, where earnings shrunk 30%, traditionally earnings grow 7 to 8%. So if you believe that AI has at least as much impact as the .com, the internet adoption would have, then we're going to see 10 plus earnings growth for years.
I'll tell you, I had a great conversation with Michael Harris, who's the head of global capital markets here at the New York Stock Exchange, and his job basically is to bring private companies public. And he said a handful of AI companies, and there's so much money on the sidelines ready to invest in these types of companies. And how it's evolving too, right? When you think about software and hardware, we'll have a lot of those big names next week, some of the Magnificent Seven, and there's a lot of AI there too, right? What do you think about earnings next week?
So I think they're going to be good, and I think the market's set up probably to rally next week. If you go back and you look at Meta and some of the others, the beat rates tend to be high. On an average day when they report, they're up 2% plus. So I think they'll bring everybody back to the story that really matters, which is earnings, because I think interest rates and inflation have been a little bit of a distraction. I see that as the noise. I see earnings as the news. This quarter, maybe we do 3, 5, 7% in earnings growth, and then it's 10% going forward for quite a while. So I think it'll bring everybody back to the understanding that it's earnings that matter, and they're quite positive.
When you look back on your career, how would you rate your optimism and bullishness that you say here today versus how you've been over the years?
Well, see, that's the part that spooks me a little bit.
Are you like a constant bull?
Well, I'm not a constant bull, and
Which
we've
is
hedged
okay.
our portfolios in the past, so if things get weird, we'll hedge. But when I look out, and I have 1,000 clients and families all over the country, and so I get to see anecdotally small businesses using AI, and they're using it, they're trimming their staffs, and they're creating more margins, and so it's not just a big company story, it's a small company story too. AI is oxygen, and everybody's going to breathe it.
For the first time in Intel's history, the semiconductor giant is set to report the financials of its product design businesses separately from its chip manufacturing operations. The company revealed this new structure earlier this month, and what this means is that future earnings releases will look substantially different than previous ones. For Intel's upcoming Q1 report, Wall Street analysts have revealed that they expect the chip company to post quarterly earnings of $0.13 per share, indicating a year-over-year growth of 425%. They'd also expect Intel's revenues to be around $12.76 billion, up 8.9% from the same quarter a year ago. However, not all analysts are bullish on the company, and some of them even expect it to miss on its earnings for this quarter. So what exactly is the case? And what should investors expect? Let's find out. Hello everyone, and welcome back to Investocracy.
As rate cut bets shift, so have moves in one sector in particular. Shares of AMD and Intel both down over 15% in the last 30 days. The Philadelphia Semiconductor Index, also known as SOX, dropping over 10% from recent highs. Despite a higher rate environment, our next guest is still bullish on the sector. Matt Bryson, Wedbush Enterprise Hardware Analyst, joins us now. Matt, thanks so much for taking the time here. Walk us through your thesis here, especially given some of the pullback that we've seen recently.
Yeah, so I think what we've seen over the last year or so is that the growth of generative AI has fueled the chip stocks, and the expectation that AI is going to shift kind of everything and the way that technology works. And I think that at the end of the day, that thesis will prove out. I think the question is really timing. But the investments that we've seen that have lifted Nvidia, that have lifted AMD, that have lifted the chip sector in general, the large cloud service providers building out data centers, I don't think anything has changed there in the near term. So when I speak to OEMs who are making AI servers, when I speak to cloud service providers, there is still significant investment going on in that space. That investment is slated to continue certainly into 2025. And I think as long as there is this substantial investment, that we will see chip names report strong numbers and guide for strong growth.
Matt, when it comes to the fact that we are in this macroeconomic environment right now, likelihood that rates will be higher for longer here, at least when you take a look at the expectations, especially following some of the commentary that we got from Fed officials this week, what does that signal more broadly for the AI trade? Meaning, is there reason to be a bit more cautious in this higher for longer rate environment, at least in the near term?
Yeah, so I mean, I think certainly from a market perspective, high interest rates weigh on the market, right? Eventually, they weigh on consumer spending. Certainly, for a lot of the chip names, they're high multiple stocks. So when you think about where there can be more of a reaction or a negative reaction to high interest rates, certainly it has some impact on those names. But in terms of again, AI changing the fundamental landscape for tech, I don't think that high interest rates or low interest rates will change that. Right. So when you think about Microsoft, Amazon, all of those large data center operators looking at AI potentially changing the landscape forever and wanting to make a bet on AI to make sure that they don't miss that change, I don't think whether interest rates are low or high are going to really affect their investment. I think they're going to go ahead and invest because no one wants to be the guy that missed the next technology wave.
Wall Street might be bullish on Intel as analysts set a 12-month price target of $45.02, which is approximately a 32% upside from where the stock is trading as of the time of this video. But in the last 30 days, there has been a downward revision of 5.8% in the Wall Street consensus EPS estimate for the quarter, and while this may not seem like a huge difference, the revision still signifies the analysts' collective reconsideration of their initial forecasts over the course of this timeframe. This is very important for investors to consider, especially because there is a strong link between trends in earnings estimate revisions and the short-term price performance of a stock. Many tech investors might say that Intel has struggled to keep up with peers like Nvidia and AMD amid the AI boom, even as the company recently unveiled its latest AI chip, the Gaudi 3 AI accelerator, which can, according to Intel, outperform Nvidia's flagship H100. However, analysts like CFRA's Angelo Zeno are not so optimistic. According to Zeno, he doesn't view Intel as a threat for Nvidia in the near future, but only as another option out there for customers. He also added that the long-term story for Intel continues to be on the foundry side of things, because the company is not producing leading-edge AI chips, has clearly fallen behind, and is now playing a difficult game of catch-up with its competitors. With this in mind, what should we expect from Intel's Q1 earnings? Will the report boost investors' confidence or cause them to reconsider their investment? Let's get right into it. But before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Intel. Now, back to the video. For Intel's upcoming earnings call, there are some key areas that analysts, investors, and tech enthusiasts alike will be keeping a close eye on. First of all, we have data centers and AI. These sectors are the current darlings of the tech world, and strong performance here for Intel could be a significant indicator of future growth. Intel is exerting efforts to support advanced processing nodes, and one example of that is the recent partnership with ASML to assemble a twin-scan scanner from ASML. This collaboration makes Intel the first in the industry to receive a high-NA EUV tool. According to the company's executives, this tool can change the optics design for projecting printed images on a silicon wafer, drastically boosting the resolution and scalability of up-and-coming processors. Now, quite a few analysts are bullish on this metric. For one, UBS analysts said that they expect Intel's data center and AI sales to rise 6% from the previous quarter, even though they may remain flat year over year. So, Intel's management team and CEO Pat Gelsinger will likely talk about customer demand for the company's AI solutions and how they're faring against the competition. But investors should also pay attention to anything they say about the PC industry. When the company reported 2023 Q4 earnings, it said that it expected a rebound in the PC sector in 2024, which would definitely help the company. However, semiconductor industry giants like ASML and TSMC have recently said that the rebound in the sector won't be as strong as originally expected this year, so Intel will need to update investors on that in the upcoming earnings call. Do they still think that the PC market will see a recovery this year? Or are they going to revise that forecast thanks to what ASML and TSMC said? That's something they should focus on.
Patrick, is there no room for error from these chip manufacturers this earnings season? Because even just judging by the reaction that we're seeing to TSMC's results and some of the commentary that we're seeing and the ripple effects that it's having more broadly speaking across the chip sector, it almost looks like they're priced to perfection at this point.
So I think that's getting a little ahead of ourselves on that. I mean, I think there is still this insatiable need for data center AI silicon. In fact, a lot of NVIDIA's best parts have 6-9 months lead times still, and they just can't get enough. And every one of those AI installations typically have to be paired up with a modern CPU from Intel or one that's designed from ARM. And then you have this upcoming, what I like to call the PC and smartphone super cycle that isn't being placed in. So I think we're getting a little ahead of ourselves here in some of the doom and gloom. I mean, there's a lot of TBDs when it comes to the inflation numbers and interest rates here in the United States and around the globe. And I think those, in addition to what is going on with the conflict in the Middle East, are giving people a little bit of a wait and see attitude.
So, Patrick, what's going to give investors more confidence? Because when you take a look at the reactions, at least this morning, is this a bit of an overreaction then, you think, to the downside?
I think it's an overreaction. I mean, listen, the high-end semi space and everybody in that value chain, the stocks have just shot up like rockets. The AMDs, the Nvidias out there. And by the way, anybody affiliated with that, which is Amazon, Microsoft, Google, and Meta. And I think, this is just a cautious blow, likely some profit taking and some jittery reactions from what's going on with interest rates in the Middle East.
Intel's foundry business is another key area that will be considered, especially since Intel is making waves by establishing its foundry business as a more independent unit. In fact, Bank of America analysts have noted that Intel's foundry business ability to be profitable in a competitive environment plays a role, among other factors, in the bull and bear cases for the stock. So, investors may want to know if Intel is on track to become a bigger player in the chip-making game, because if that happens, then it could have major implications for the industry as a whole. Earlier this year, Intel reported a $7 billion loss in its foundry business, but it's important to note that UBS analysts have mentioned that Intel's foundry losses are not entirely unexpected, as the chipmaker's costs are higher than its competitors. These analysts also added that although UBS remains optimistic that profitability will improve as Intel transitions away from structural cost challenges, it is also cognizant that most of the profitability improvement only materializes in 2027 and afterwards. Additionally, Intel's CFO, David Zinsner, said last quarter that the company managed to save $3 billion by increasing its operational efficiency, adding that 2024 will be even better for efficiency as the company implements its new internal foundry model. So that's another thing investors should watch out for in the earnings call. It's very rare that a company is able to expand into manufacturing and new lines of businesses and still accomplish cost efficiency, so that's great on Intel's part. I'm personally not too worried about Intel's foundry business because this part of the company's business is supported by the US government, which keeps offering billions in incentives for the development and manufacturing of chips in the country, and that's exactly what Intel is doing. Intel is forecasting 2024 Q1 revenue of $12.2 billion to $13.2 billion, and they're expecting a loss per share of $0.25. For the full year, Intel said that they remain focused on achieving process and product leadership, continuing to build their foundry business, and executing the company's mission of bringing AI everywhere to drive long-term value for shareholders. So, is Intel stock a buy before earnings? Over the next few years, Wall Street is very optimistic about Intel's earnings, expecting an EPS of $1.26 for this year and $2.09 for 2025. And for the next 5 years, analysts expect Intel to deliver 40% EPS growth for each year, which is why the stock might be a great buying opportunity right now. Still, it's always riskier to buy the stock right before earnings, so if you want to lower your risk, you could buy some shares before earnings to not miss out on a potential upside if earnings turn out to be better than expected, then buy more after earnings in case of a dip. We don't really know which way the stock will go for Intel after the earnings, so in the end, the real story will lie in the performance of key sectors like data center and AI, the progress of the foundry business, and any hints about future innovations. So we'll see how it all plays out when Intel releases the results. Notably, Intel stock is down significantly now, as it was trading very close to $50 in the beginning of the year. So if you believe in the company and in the long-term potential of its foundry business and AI chips, it might be a good idea to load up on some shares now. But what are your expectations for Intel's Q1 earnings? Let us know in the comment section. If you would like to know more latest updates about Intel and what it's been up to, then go ahead and click on the next video on your screen. See you there.